Welcome to this episode of ACG's GrowthTV. I'm Carolyn Vallejo, and today I'm joined by Rett Crocker, CEO and CTO of Udoo. Rett, thank you so much for joining us today.
Yeah, thanks for having me.
So many private equity professionals are kind of the mind that business development done right means boots on the ground, face-to-face interactions. Can you talk a little bit about where data analytics and machine learning fit within this approach?
Yeah, well, first off, I 100% agree. Face-to-face interactions can't be beat. They're just so high bandwidth. With that said, AI and machine learning can really help you augment your existing processes so that you can make better decisions about who to see and when to see them. Data analytics can help you really cover a lot more ground. You're going to be able to do things faster, and that'll increase deal flow.
Now, in narrowing a wide swath of prospects to find just the right fit for a roll-up strategy, what are some of the criteria and tools and processes that business development professionals should target?
Yeah, when we started working with private equity, we found that they were just very heavily reliant on quantitative metrics like revenue and EBITDA. And while that'll find you companies that are at least at first glance a financial fit, you're certainly going to miss some ideal candidates. That's mostly down to inaccurate private company data, by the way. We found that a qualitative approach is really the right way to go. Basically, focus on the business model fit first. Then, once you've narrowed down your target list, you can bring various other data science techniques to bear to help you find those kind of financial KPIs that matter to you. Even when there isn't accurate data. And that'll help you find those diamonds in the rough.
Rett, what's a common pitfall that you have seen when business development professionals attempt to implement technology into their deal sourcing strategy?
Yeah, that's a great question. They quite often try to rely too heavily on those quantitative metrics. It's just private companies are the information's not public. We're not hedge funds, right? So that changes the game here. We have to figure out a way to analyze businesses without knowing the exact health of the business from revenue and employee count and things like that. And you can use things like job posting data and semantic analysis, like from machine learning tools, to really sort of hone in on what it is you're really looking for and find those businesses at the right time when they've just hired that VP of sales or just landed that big customer. And that's really the right way to do it, in my opinion.
Could you give us an example of business development done right using some of these advanced data tools like Udoo?
Well, the first step is don't have humans doing tasks that computers are better at. For example, searching for targets and doing initial vetting, it's often something we see assigned to human analysts. But the reality is that AI and machine learning can perform those tasks so much more efficiently, and they'll turn up opportunities that would have been missed otherwise. Leaning on AI frees up humans to use our big brains for higher value activity. And yet again, that's going to increase deal flow.
Rett, thanks again for joining GrowthTV.
Yeah, thank you so much.